Hello and welcome to another update video about Ethereum. So in this particular video, we want to take a look at the chart here on the 1 hour time frame. The yellow count, in my opinion, continues to be in control. Anybody who missed the previous videos, the view is that Ethereum is going to come down after this B wave topped here on the 28th of May, that we're coming down now in a C wave, which should at least, ideally, send us to 1660, possibly lower, okay? And this would be a 5-wave move, and it looks like, I mean, if this is the correct count, it should be an ending diagonal, like a wave 1 down, a wave 2 up. The wave 3 would be followed right now, but it would consist of an ABC structure. I expect this count to change, okay? This diagonal patterns always change because they are just, you're dealing with unreliable corrective structures, okay? So just be aware of that. But based on that, we can say that as long as we stay below 1882, and we're going to zoom in a minute, or 1883, price should follow through to the downside in the yellow wave count, and the yellow count is in control. And it would be further confirmed that this is the case if price can break below 1820. Now, there will be a lot of support around 1750 to 1770. You can easily see that because it's basically here where it starts. Actually a little lower, but 1750 is the 50% retracement. Now then you have a lot of previous support here around 1790, 1775, 1770, and then here the latest 75. So it's a little bit like we tested that support level once, the 50% retracement, which is big in front of you on the screen, but then price didn't really want to get close again, so it just sort of came near it and it just was rejected straight away. Price got scared from the 50% level. I don't know, but certainly it could never push to the upside in an impulsive way, and that typically indicates that a drop should be coming. Now, nothing is ever guaranteed in these markets, okay, but we talk about what's ideal, what would be likely, what's probable. So just be aware of that. So in the yellow wave count, I shared with you that we can actually count the move down of this Tuesday high as a wave 1. We can count it as a 5-wave move. Disregard the orange count. We talk about the yellow count. You can count it as a 5-wave move down, would be a leading diagonal. The move up as a wave 2. Now, okay, the wave 2 can still extend a little higher, but that's why we've got the red resistance area there on this chart going all the way up to 1882.50. And it's a 78.6 fib level. A break above that level would make the yellow count in this particular structure, let's say, then unlikely, because you don't want a wave to go beyond the 78.6 fib level and sustain there. But in the looking at the subwave structure, this looks like a wave W to the upside, a wave X, and we could now be working on a Y wave, indicating that, hey, this could push a little higher. And we talk about resistance at 1860, 1869, or 1882. So it's not a massive area. So it's going to be interesting to see if we are going to find some resistance there. Alternatively, this could be a triangle or something. Yeah, but it would also not necessarily be bullish. But in this move down here, we already, basically the orange wave count, which would be the short-term bullish count, maxed out what it should do, because this was the 78.6 fib level, just the other way around, and price found support, and that's great, yeah. Anybody who traded this area is probably in profit, but I warned you earlier today, just be aware, make sure you have your risk management spot on, because the move up off the low looks corrective. So in the orange count, which would be sort of the short-term bullish count, we assume that this was a B wave low, and it should now rally in a C wave, if not something more bullish. But yeah, it's too weak, okay? So it looks very, very corrective from that point of view. I remain in favor of the yellow count until, and there's always a level where we have to change our view, that's just always trying to be objective here. That's the advantage of Elliott Wave. It gives you these clear levels where one scenario moves into another or morphs into another, and that's the 1882.50 level. So it's going to be interesting, but it looks to me, it reaffirms, price structure at the moment reaffirms my view that another low should be coming. But it's an extremely tough range in which we are. Bear in mind, next week we've got the FOMC meeting, interest rate decision, as well as inflation data. So Not sure how much is really going on until next week. But hopefully it's not, well, it will probably be another boring weekend as it seems, but we'll see. So yeah, hopefully you liked the update. If you did, please hit a like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.